India's excessive inflation to paced for longer. Charges to upward thrust extra Bengaluru. India's inflation will keep above the top of the valuable financial institutions tolerance band for as a minimum the rest of 2022, longer than previously concept, making several more interest charge hikes in coming months all but inevitable, a ballot confirmed. One of the later entrants in the cutting-edge spherical of world economic policy tightening, the Reserve Bank of India raised its repo charge via a total of 90 foundation factors in May and June. However, the inflation outlook has deteriorated because an April poll. Soaring worldwide commodity costs have stored inflation above the RBI's 6% top tolerance variety all year whilst. So far, New Delhi's monetary response to rising fees of living in the country of $1.4 billion has been modest. Inflation turned into set to measure 7.3% and 6.4% in Q3 and Q4 2022, respectively, according to forecasts from the July 411 ballot. In the preceding ballot, inflation was set to go back to the RBI's tolerance band through end year. In India, inflation will prove lots extra stubborn than it's going to in different components of the place. Things gets higher, however they may get higher a great deal faster in other components of Asia, mentioned Miguel Chanco, chief rising Asia economist at Pantheon Macroeconomics. Average inflation this financial year became penciled in at 6.8% in keeping with a survey of 42 economists, a sharp upgrade from 5% inside the April ballot, coming down to 5.2% and 4.7% in the following 2 years, respectively. The RBI is anticipated to further hike the repo fee, currently at 4.90%, by using some other 0.75 of a percentage point to 5.65% with the aid of end-year. That is barely higher than a separate survey taken in June, which positioned costs at 5.50% with the aid of then. In the modern-day poll, over half of the economists, 25 of 48, forecast charges to be at 5.50% or higher by the end of this zone. Among folks that furnished a forecast for the August Assembly, greater than 1/4, 10 of 35, anticipated the RBI to hike by means of 35 foundation factors to 5.25% at its Assembly subsequent month, at the same time as 14 count on a smaller quarter-point hike. 9 mentioned the RBI would boost by means of 50 foundation factors, 1 said 40 and 1 mentioned 30. While India remains one of the fastest-growing fundamental economies, growth is forecast to common 7.2% this financial 12 months, barely lower than the 7.5% tempo predicted in a previous poll, and in line with the RBI's 7.2% projection. India would nevertheless remain one of the quickest developing economies. However, India's boom could be still pretty susceptible through the standards of what India requires, mentioned Kunal Kundu, economist at Société Générale (OTC, SCGLY. The less appreciated venture for the Indian economic system is the fact domestic demand is susceptible, actually because jobs aren't being generated to the extent they ought to have. Asked how the employment state of affairs has changed over the past month, 15 of 27 stated it had stepped forward slightly, with the final 12, over 40%, announcing it had worsened slightly. Still, the price of living disaster isn't expected to ease substantially till at the least next year. Of economists who spoke back an additional query, 20 of 26 stated it might take at least 6 months or extra. The final 6 stated inside 6 months. A weakening rupee has exacerbated the difficulty in addition. The foreign money, already down over 6% for the year because of higher oil expenses, India's biggest import, changed into expected to set a new report low of 80 to the greenback by using September, a separate ballot discovered. For other testimonies from the International Long-Term Financial Outlook Polls package smiley face.